It's Monday, November 10th, 2025, and while the thumbnails on the videos are back to normal, we're sticking with the same format this week of recording every day. I'm going to keep it a little shorter on the macro and really get into the charts just so we can talk through how things are progressing day by day so we can figure out how to position our portfolios as markets hopefully find their footing. And I'm going to keep this going with the daily videos until we see a bit of a rebound or until we figure out if Bitcoin is extending its cycle or if we are going into that corrective period with the traditional 4-year cycle. So we did see things rally today, well actually overnight already, on the backs of the US government shutdown potentially ending. We should get a resolution on that by mid-week to end of week. Also, Donald Trump proposed 50-year mortgages, an extension from 30-year mortgages to 50-year mortgages. That's a whole other discussion that I made a post on this weekend and how it's actually not healthy for those who are struggling to extend by that much because you lower your monthly payment by a little bit, but over the life of the loan, you end up paying substantially more to the banks. So it feels like it helps you in the short term, really hurts you in the long term. But the other thing that got things going was the talk of a $2,000 tariff dividend paid to all U.S. taxpayers or U.S. adults. Now, I also made a post about more detail on that on Patreon over the weekend. But I think the main takeaway that I'm thinking about, while that may juice the markets, it was politically a very shrewd move. And say what you will about Trump, but he has the whole Supreme Court case going on with tariffs in the background. And this shifted the focus. Now, if Americans are getting a $2,000 tariff dividend, it changes the narrative from Trump versus the Supreme Court to America versus the Supreme Court. So politically, it was very shrewd. And I think the point for trading that I want you to take away from this is that I don't think tariffs are going away. Even if the Supreme Court rules that they are unconstitutional in the current stance, there are about 4 other historical precedents that Trump could lean on to enforce tariffs in some way. So I think it's going to be a long, drawn-out legal fight with back and forth, and no one's really going to be able to take tariffs away quickly. So that's not something we should necessarily be trading on, to think that, oh, tariffs all of a sudden going away is going to juice markets. I wouldn't count on that. Now, let's talk about the near term and right now, because the talk of the US government shutdown ending is what really rallied markets. And we did see a bit of a pop into the second half of Friday already as people were speculating at that. And then we saw the overnight jump. But the market action today, while positive, didn't really have that much breadth to it. And it looked to me like a bit of short covering. And I think we should be careful going into Tuesday and Wednesday of this week. I think we still can move a little bit higher in the short term, and we'll look at the indices for that. But a lot of individual charts are suggesting on the daily chart and even on the 4-hour that there is a little bit more room to correct. So I want us to be careful of that. And my main job right now, I would say, is figuring out, is this correction over, and are we going to move to fresh highs? And also on the crypto side, is the Bitcoin 4-year cycle extending, or are we truly at the end and do we need to get more defensive? So all that aside, I think the other thing I have been thinking about is that this has already been a concentrated market this year. We've seen select sectors outperform and other sectors very much lag behind. And we see that just even in the concentration of the small number of names that are outperforming. And we have, record names at 52-week highs and record names at 52-week lows. So we have a very divided market. But I think as we get into 2026, we're going to see even more concentration. So amidst sectors that have run, like AI plays, even Bitcoin miners, or we can call them HPC plays now, those have broadly run as a sector, but we're starting to see certain names outperform. And I think even within those sectors and those narratives that are moving, it is going to concentrate more and more into select names. And one way we see that right now, say on the Bitcoin miner front, you see, Iron and Cypher have definitely outperformed as early leaders into the HPC space. But on the semiconductor side of things, you are seeing the memory plays like MU, like SanDisk, those kinds of plays outperforming some of the chip manufacturers because there's such a backlog and demand for memory components. So it's going to be a time where we have to focus, study on those sectors, and really pick the winning names. It's going to be a trader's market and a stock picker's market. So stay nimble and sharp, but let's get right into the charts to see what they are saying for markets as we get into the middle of the week. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, let's start on the S&P 500. So the rally from last Friday persisted in the overnight yesterday and continued today and got us above, barely, our previous swing high here from the 5th of November. So we're holding on top of that trend line currently. Now, things did get a little bit overextended, and if we head higher tomorrow, I think we could make it up to 6,900 here on the S&P 500, which is the middle of this previous zone. And while I think on the longer time frames we do have a shot at heading higher, I could imagine some resistance coming in and dropping back down and perhaps doing something like that. But right now, as I said in the intro, the rally today wasn't totally convincing to me. It might have been short covering, or maybe it's just folks hesitant to get back in and maybe they'll get left behind and come back in on some kind of pullback. But let's watch out for that this week to see if that can continue. What's interesting is that the S&P 500 is actually looking stronger than the NASDAQ, and that equivalent pivot point on the 5th of November is still overhead for the NASDAQ at 25,890. So we can just say 25,900. And we close the day at 25,750 roughly. Now, why I say that's surprising for the NASDAQ is because NVIDIA really rallied today and showed a lot of strength. And you would think if NVIDIA is running and other semiconductor names like MU are running, that would show through into the NASDAQ more than the S&P 500. But things, I suppose, were a bit more broad-based and generally speaking not as tech-focused, even though NVIDIA really showed out. So we have a little bit of resistance here on the 4-hour on the Confluence Model Cloud, but we have a lot of room to run to the upside. And if we can get above these previous pivot highs here at 202, we're just at that psychological $200 level right now. That would set us up most likely to test fresh highs on NVIDIA. Now here in semiconductors, we can see how not all names are performing equally. So we'll switch over to MU in a moment, that is outperforming, but TSM has stalled out a little bit. And in terms of this price and time target of getting to $337, $340 by the 16th of December, we've now dropped underneath that trend line. And this isn't a trend line to support price. It's just measuring out the speed of the previous run up. And if we're running to 100% extension, you would want to assume that we're going to hit that price target sooner. So this is a subtle sign of weakness just now that this is taking longer. And also we've broken down a little bit in terms of lower lows here on this recent swing. And we'll have to see if we get a lower high or not. But the weakness is evident. So I'm starting to watch this across the sectors. And if we go to MU in contrast, MU has just continued to outperform. The price and time extension for MU was right here at 171. And we're all the way at 254. And now it looks like we're going to head to the 2618 extension, which is up at 281. So the memory, the critical memory suppliers have definitely outperformed and are showing that strength. And a name that we haven't looked at much, but SanDisk has really run, and they just had earnings last Thursday, was it? Yeah, it was last Thursday. And it took a bit for the market to digest their earnings, but they have orders, I think, through all of next year, through 2026, and that massive backlog to fill. Now, it has run massively from 42 up to 270 in, gosh, how long is that? Since August. Oh my gosh, in 2 months doing 5x. That is unbelievable, more than the 5x. But the market definitely undervalued this and is now catching up. The problem with a trade on something like this now is it's very hard to get in, especially when things start going vertical like this. But the broader point is that this is where the market is finding value right now in the memory side of the semiconductor and AI story. Okay, now let's look at gold, because gold caught a bid today as well after a couple weeks of consolidation. And the market is pursuing that flight to hard assets again, where equities ran up at the same time that gold is running up. And gold is also sensitive to liquidity. So perhaps the thought of liquidity coming into the system boosted both this and Bitcoin. But if we look at where we got just in terms of this correction range, we got right into the 50% level, which is right now sitting at about 4,140 about. Peaked our head above it, but can we get back above that, or are we going to stay in the weaker half of the range? This is one to watch for gold, and I think is going to be a bit of a dividing line between showing more strength to the upside or perhaps a bit more chop and consolidation below that 50% there. So keep an eye on that. Okay, moving on to Bitcoin or digital gold, and this saw a decent move on the news on Saturday as well, moved in lockstep with gold. And the good thing was that we broke this consolidation range that we were in for most of last week, had a decent weekly candle close at 104,700. It would have been stronger to see us close above 105,000. But I will take any sign of strength I can get with Bitcoin right now. And we're just starting to find a bit of resistance at that 107,500 level. And I made a post this weekend about the next major resistance being between 107,000 and 108,000, because we think of these areas as zones, even though this swing low right here from the 31st of August is at that 107,500. The daily candle closes were closer to 108,000. So think of this as a range. And then we also have the Confluence Model Center Cloud here on the daily coming in. But the next major hurdle overhead would be that 111K level. And you can see how historically we've really chopped around that level and found a lot of resistance. And currently the 200-day moving average is coming in right there as well. So if we can get above 111K, that would be the first time in the last few weeks where I would be saying, okay, Bitcoin's starting to show a little bit of strength. And then we have to get above 117K at these previous swing highs. If we can do that, then I would say, okay, not only is it showing strength, but it's looking like it could retest all-time highs. And if we're just looking at the lower band on the daily, we know that the price action normally takes 2 swings to 3 swings in the lower band. So this could be the time we break through. There is also a chance that we do get one more swing lower, something to watch out for. But all in all, it's a good start for Bitcoin here. And if we're looking at overhead resistance, we can draw in some trend lines here off the highs. And you can see that we're getting close to that as well. So we'll be tackling this trend line as we get into 111. I would imagine that we will most likely see a bit of resistance and a fair bit of chop before moving away meaningfully. But I would be happy to be proven wrong on that. Okay, if we look at Solana, it's actually outperforming Bitcoin slightly this evening. And the next major resistance is coming in at $178, which is a major resistance zone. It's also where the Confluence Model Center Cloud is right now. So we have a historical price level and we have a dynamic moving average level. And if we look all the way back here in May, that was actually the price target from the inverse head and shoulders off the April low. And we've really chopped around this area quite a bit. Now, of course, we've wicked above it and below it, but if we're just to take the center point, this actually ends up being one of the most traded zones on the VRVP here in our recent price action. So that's going to be a big hurdle for us. I imagine if we get up there, we're going to have to fight with it a little bit, but getting back above that zone would be a good sign of strength for Solana. And then I would be watching this trend line break, because this trend line propped us up for 7 months. So I would have to imagine that now if we come into it from the underside, that is going to be a bit of a fight as well to try to get above that. Okay, if we're looking at Tesla, it had a decent bounce today and we printed a higher low here. Now, we did get above that 440 zone today, which was a good sign, but then we rejected from the 450 level, which has provided a lot of resistance for us in the past. Now we still haven't made a higher high or a higher low. So it appears that this is most likely going to pull back, perhaps back to 430. So watch this for signs of printing that higher low. If we do that, that would be the first sign of strength, that we would be printing that, and then presumably you'd be able to target a higher high. Still, a bit of caution is advisable. There's a lot of liquidity down just above $400, and this head and shoulders pattern that we printed last week, that's where the price target is pointing. So it's still something we have to keep on our radar. Even though we had this bounce up, we didn't break above the right shoulder. So technically, that price target is still in play. Okay, pivoting over to MicroStrategy. Now, while Bitcoin bounced, MicroStrategy, unfortunately, after breaking this long-standing trend line last week, bounced and wicked above, but is finding a bit of resistance there now. So I would love to see MicroStrategy find some strength. This breakdown is still suggesting that we might head all the way down to 185 to test these previous highs as support, especially after breaking a long-standing trend line. But I have to imagine that's going to be hard for MicroStrategy to do if Bitcoin does rally. So watch Bitcoin as the lead on this one. And the other thing we can draw on now, because we've had these two overhead resistance trend lines, we could map out a third one here. And actually, shout out to Dan in Patreon, who already put this on his chart and flagged it. But as a downtrend accelerates, just how a blow off top will, have a certain pace to the uptrend and then will accelerate, and then you get really extreme. You see that same thing happen as selling pressure increases. So we're chopping around, and then we have our initial pace to the downtrend and then that steeper clip. And now if we have, say, one sharp wick down and a recovery, that would be the equivalent of this blow off top in reverse. So that is definitely something to watch out for. And while, it is discouraging for MicroStrategy bag holders that the price has not performed, this is telling you that you are getting closer to the end than to the beginning of the sell-off. And what you would want to see is, in addition to a sharp move, you would want to see some kind of volume climax down here. And here at a lot of these pivot points, you can see how the volume spikes up. And those volume climaxes often give you a turning point in markets. We even had some little ones right here at this little bounce and near the top. So it's something to watch out for, and the larger the volume spike, the more convincing. Okay, let's take a look at HIMS, because I want to pull up a couple of the names that I'm looking to get into a position on. And we did break down from those previous swing lows last week, which is putting HIMS in a weaker position. And we are taking that first swing in the Confluence Model lower band. So usually that means that we're taking a couple swings there. And our next target is that $35 level. And let's get rid of my Solana alert. So let's see how this shapes up. The daily hasn't bottomed on the RSI yet. We haven't gotten a mean reversion dot, but we are getting close. And then let's just go over to the 4 hour. The 4 hour is definitely to a point where it could turn around anytime now. So that's something to watch on HIMS. A turnaround is coming in soon. We are just barely holding this support at 41, but a move down to 35 would not surprise me. That support level is just above 35 at 35.68. So watch for that. And if you don't nail the bottom, there's no harm in buying on the turnaround. So right now, if we're just looking at the 4 hour, we still have lower low, lower high, lower low, lower high, lower low, lower high, lower low, presumably lower high. Let's see what happens here. But if we make another lower low, then you would be looking for that first change where maybe you make a higher low, higher high. So an entry on something like that, or after that next higher high and the next higher low, getting in on the confirmation of a change in structure. You might be buying at slightly higher prices and not nailing the bottom, but at least you know that the trend has turned and price structure has shifted positive. And if you do have the InvestAnswers indicators, you can always use the optimized trend for this as well, which is clearly still sitting in orange. Okay, looking to other names, Hood, while it did break down from this trend line last week, or just wick below it, it didn't close below it, we did hold that RSI support. and continued to bounce away from there. So right now, it does not appear that Hood is giving us a better entry around 117 like I was hoping for. So now I'm just watching this to say, okay, is this just going to be some kind of tightening range that we are going to be in? And then which way is this going to break? And that will give a lead on the next move and get us to a point where we can actually speculate at some price targets. But right now, holding this RSI support is a decent sign. And I'm just watching this to give me a cue on what the next move is going to be, rather than jumping into adding to my position. Coin had a good bounce today as well, but let's see where we are here. We did get above these previous swing lows, so a decent sign for Coin, and we actually passed that pivot high from the 5th of November. Now, our daily RSI has not reset yet. We might be getting a mean reversion dot soon, so I am paying attention to mean reversion. Normally, the daily RSI, when it breaks these downtrends, goes pretty much all the way back down to 30. We have not gotten there right now. So just keeping my eye on this one. It's definitely weaker than Hood. And if crypto breaks down for some reason, I imagine this would take another swing lower. But if we are looking to signs of strength, we did break into the lower band, but we bounced back above quickly. And we also bounced right from the 200-day moving average. So that's a good sign. And being back above this key level at 310 is also a good sign. So good bounce today, but if we go to the 4-hour, we can see just a little bit more detail. And the one thing that has me thinking we might see a bit more pullback here is that we are just into that confluence mile center band and we are trending down. So if this can break through, that's a sign of strength that we really only took one major swing. I mean, I suppose you could argue that these are your two swings in the lower band, but this would suggest that maybe we have one more move and get ourselves kind of a double bottom. But just watch this, and if it breaks through, then you have to assume, okay, these were our two swings. It's showing strength, and it's most likely going to recover. And yeah, you didn't get in at these lows, but now you can be fairly confident that the 4-hour RSI is going to move back to the top of the range. And then you could look for resistance here at 360 at this previous swing high. And I imagine that's where the confluence model center cloud's going to come in as well. Okay, if we are looking at ARM, which had that breakdown from previous support last week, we held it for 2 days, then broke down and had a decent bounce up today, but I'm still being patient on this one, even though I want an entry. Our optimized trend just flipped orange on the daily, and our mean reversion on the daily RSI still has a way to go to reset. And the thing that's making me think we're now going to reset on this chart is if we go to the 4-hour, we just got into the confluence model lower band, and even though we had a good bounce, we rejected today. So this has me thinking that we are going to perhaps chop around a little bit more, even if we don't pull back down to lower prices too meaningfully, because we are fairly oversold here, right, on the 4-hour mean reversion, that we might just chop around a little bit. But if we do just break right back into the center band, so that would correspond with a move above 159, 160, then we would have to assume that there's strength in this and that we are most likely at that point going to go for a 4th time breakout. So we have to be ready for both sides of the market. And so since we've tested this trend line once, twice, thrice, our 4th time breakout has a much higher chance of breaking through. So look out for this to see if we recover above that level. And even if we do end up chopping around a bit more, we can still have that 4th time breakout on the cards. There's a world in which you could just tighten up in here and then go for the 4th time breakout a little further down the line. Okay, I do want to talk about BBAI briefly before getting to our major Mag 7 names. And out of all the players that reported earnings today, and I'm not going to get into all of them, but if you are on Patreon, I made a post on all the earnings reports today and just going over which names were showing strength and short-term and longer-term price targets on those. But BBAI had a over 15% jump on earnings. And even though we broke this lower trend line, we did bounce off the 200-day moving average last week. And this move getting us back into the center cloud on the 4-hour is a good sign of strength. I imagine that next resistance is going to come in overhead at about, well, we have this trend line to watch, but we already broke it once. I'm not trusting it too much more. I would say between $7.38 all the way up to $8, we're going to find resistance somewhere in that area. But a nice turnaround here, and this could have a bit of a relief rally after a decent pullback. I mean, how much was that from the highs to the lows? And I missed the top a little bit, so I'll just go slightly beyond. Over a 40% pullback over the last couple of weeks. So really meaningful there on BBAI. And if we can pass some of these previous swing highs here at about 740, there's a good chance we can attempt all-time highs again. Okay, let's briefly just go over the Mag 7 names. So Amazon continued that bounce from Friday. Looking good on the 4-hour chart here. We're in the confluence model upper band, going to attempt our second swing here, so probably heading a bit higher. If we are looking on the daily, we are firmly in the upper band on the daily and have a lot of room to go here. You could drop to 235 and still be bullish on the daily upper band here. But let's look at Google, and Google is also recovering nicely, broke this previous swing high from the 6th of November. Looks like it is going to attempt fresh all-time highs, which would probably have it seeing resistance now at that psychological $300 level. We definitely, have things cooling off here in terms of mean reversion and RSI on the 4-hour, which is not a bad thing. But on the daily, the thing to watch is we do now have a bearish divergence. So that's just telling me that Google is going to cool off eventually. And now the measured move extension, the 100% extension from this flag pattern that we had over the summer, I don't have it drawn in on this chart, but it was at 330. So assuming we can get through that $300 psychological resistance with this bearish divergence, I think somewhere around 330, we are going to see a cool off for Google. And then Microsoft. Oh, we have our squiggles from Friday. Let's keep those on here. All right. Microsoft didn't confirm the double top yet by breaking this intervening low from the 5th of September. So right now it has bounced exactly from support at 492, 493. And we just need to see what this can do. It's getting into a tightening range here on the daily cloud, which tells you there's volatility incoming. And let's see if the 4-hour confluence model clouds can give us any more info. So these correspond to that turnaround we're seeing with mean reversion over 2 standard deviations oversold. But look at this. The confluence model cloud plays out so perfectly. We found resistance at that today. So I'm assuming we're going to take another swing lower. And the question is this going to be a higher low, or are we going to drop down and are we going to break this low? Because if we break this low, even if we eventually get back into the center band, it suggests that we are going to see those lower prices and then target the price target from the double top, which would be all the way down at 430. So definitely something to watch on Microsoft here. Is it going to hold the line, or is it going to break down more? And a breakdown would be a decent setup for, let's say, a medium term short over, say, like a 6-month window or so, just to give yourself some time. Okay, and last one, Meta. We'll pull that up. And Meta is trying to find its footing here. We bounced off of a key fib level and that psychological level at 600 on Friday. And now we're back into resistance at the underside of the 50% level. And let me just hide mean reversion and RSI so you can see where this is coming from. The 50% is coming from those lows in April, from the bottom of that move. And actually, I missed that. I missed that wick down. I just got off this pivot low. So we should adjust that actually a little bit to be completely accurate, because maybe we are on top of it. All right. I was doing that off the daily when I drew it. But even with that adjustment, we are finding resistance right at the 50% level. That just sharpened things up for us. So let's see what we can learn from where we're at in the daily and the 4-hour. So on the 4-hour, this was an instance kind of similar to what I was talking about what could happen to Microsoft, where we took 2 swings in the lower band, tried to recover, rejected, and now we're taking another journey through the lower band and can hopefully recover again. We haven't quite hit the price target yet of that 580. So if we reject here, perhaps this next swing is going to take us a little bit lower and into this major trend line that we have for support. So, the downturn for Meta is slowing, but it might still need a bit more time to find its footing. So I'm just watching this one. I do want to add, I have leaps out to January of 2027 on this, and I got into one position right on the overside of the 50% in case that would play support. It did not. So now I'm going to look to add to that entry just to average out my options a little bit and then just play that recovery bounce. All right, so that is it for the charts. Let's see if the rally can sustain into tomorrow. And I'm hopeful that even if we see a bit more of a pullback, that we do set another higher low and continue our way onto a recovery to fresh all-time highs. So let's see how that plays out. In terms of picking assets to consider for entries, I would look at the main sectors that you want to be trading. Look for strengthened sectors. And then as you look at those names, see which names have outperformed on this rebound and just do a simple relative strength analysis, because as momentum picks back up for markets, as things lean more risk on again as opposed to risk off, the names that are outperforming now are most likely going to run most aggressively when that risk on attitude comes back to the broader market. So that's it for today. I'll see you guys tomorrow. Bye for now.